Hello everyone, it is Sunday, June 6th, and this is episode 16 of Odds Are, your S&P 500 weekly market forecast. Let's jump right in. What happened last week? All right, so it looks like we went high, tried to hit the upper breach point, then pulled back down, then we went low. We got close to the midline, which is right above that breach point, represented by that red line above there, and then bounced back up. Then we got really close to the upper breach point and then pulled back away from it. So at the end of the week, there were no breaches of any breach points. And for anybody who's been watching the show, you know what that means. That means we have a ridiculously high probability that next week we will breach one of those points, which we'll get to in a second. But let's take a look at the parabolic SAR. Again, nowhere close. Didn't even come close to that number, stayed within the expected settlement range. And at the end of the week, we ended up higher than we were at the beginning of the week, but still kind of like staying within that Bollinger Band range and being constrained by that upper resistance level. All right, let's look at the moving averages. Everything's still green, no surprise there. We are still stuck in that trading range where the market's just going close to the all-time highs, then coming back down, then back up, back down. We'll see when it eventually figures out what it wants to do. Let's pull in now the breach points. Okay, again, 95.45% chance that we will breach one of these breach points. That is not a directional forecast. It is simply saying that historically there is a very, very, very high probability that we will breach one of these breach points following a week where we did not breach a breach point. So if you guys are in the option space, then I don't have to tell you, but this is actually a pretty cool opportunity if we know that there's a high probability the market will go above or below a certain point. If the price is right, you may have a structure on your hand. All right, let's add in the expected settlement range. So we are looking to close somewhere between 4110 and 4300 next week. That is a 79% chance that we will close between those ranges. And we are looking at the breach points, which are within the expected settlement range. So we definitely can do both. We can achieve that or fulfill that 95% chance that we'll breach one of those breach points and still stay within the expected settlement range. It's happened many, many times before. Would not be surprised to see it again. And we will add now in the parabolic SAR, which is at 4056, still going up steadily, but still outside of the expected settlement range, which doesn't mean we won't close below it, but it just means we're expecting it to close between 4110 and 4300, so not expecting it to close below that parabolic SAR level. Now let's bring these all together, and we've got all your significant points here. Take a look at how we are still trapped between that midline of the Bollinger Bands and the upper limit of the Bollinger Bands, highlighted by the shaded blue area. So, are we going to break down below that? If we go below that 4184 and close between that 4110 and the 4184, then we'd be in the lower half. That would be a significant change. That'd be something to watch out for. Right now, still no threat of that parabolic SAR. Feels like I'm repeating myself week after week, but that's the thing with this parabolic SAR is that it will continue to track the market, and when it does get breached, it's significant. So we don't expect it to flip-flop back and forth, but when it does breach, we make sure that we take appropriate action. All right, and now let's get into what we did not see coming. All right, so one thing that doesn't happen very often is that we don't have a breach of the breach points, so that is definitely something to be mindful of. As we go into next week, let's keep that in mind that we're expecting that high probability of breaching the breach points. Also keep in mind that we are still very much range bound, and so as we do that, you're going to have some small spikes in volatility, but overall it's going to be going down and down and down, and that might be good for option sellers. But do not become complacent, because if you think that this market is going to stay in this range forever, then you are in for a rude awakening. I think that one of the things that we need to remember is that we have these goals, we have these ideas, we have these predictions of what we think is going to happen, and it's great when they're supported by data, but we cannot let that human intuition or that human desire to predict what's going to happen get the best of us, and we have to try to stick to our systems. And so with that, we lead into the quote of the week, which is actually by Mr. James Clear, who's the author of Atomic Habits. And the quote says, "You don't rise to the level of your goals, you fall to the level of your systems." Now, this was obviously not meant to be a trading quote, but you can definitely appreciate it, especially if you're a systematic trader. If you have systematic models, quantitative models, if you're trading based off of systems, you've probably experienced the situation where you went in another direction. You decided not to listen to your system, you overrode it, and you possibly paid dearly for it. I know I've done that before early on in my trading career, and I still battle with that. So just a little motivation for you guys. Stick with your systems. If you want to work on your systems, that's great, but don't build a system and invest into it and then not follow it. If you're going to do that, then go ahead and become a discretionary trader. There's nothing wrong with that, but pick one way or the other, because if you don't master anything, then you can't really expect to get anything out of this market. All right, with that being said, enjoy the rest of your week, guys. Take care, and I will see you here next week.